Something is happening in Japan right now, and almost nobody in the Western world is talking about it. The CEO of one of the most powerful financial institutions in Asia, a firm managing tens of billions in client capital, just made a public statement, on the record, no ambiguity, no hedging. He said, XRP will be expensive. Not a YouTuber, not a crypto influencer, not someone with a price target and an agenda. The chief executive of SBI Holdings, Japan's financial giant, looked at his operational dashboards, looked at what his institution is already doing with XRP every single day, and decided the world needed to hear this. And that is where our story begins. Because there is something buried inside this statement that most people are going to completely miss. And if you miss it, it will cost you. So stay with me, because what I'm about to reveal goes far deeper than any price prediction you've ever heard. Let me give you the full picture of SBI Holdings. Because if you don't understand who said this, you cannot understand why it matters. SBI is not a crypto company. Let me say that again. They are not a crypto company. They are a Japanese financial conglomerate. They operate across banking, securities, insurance, asset management, and digital assets. They run one of the largest online brokerages in Japan. They manage client money at a scale that most people cannot even conceptualize. And here is the part that changes everything. SBI has been operationally using XRP for international payment settlement since 2021. Not testing it, not piloting it, using it, moving real money between real institutions across real borders every single day. So when their CEO says XRP will be expensive, he is not speculating from the outside looking in. He is forecasting from the inside, looking forward. He sees the institutional volume coming. He sees the partnerships being signed across Asia that the Western financial press is not covering. He is sitting on operational dashboards that you and I will never see. And he chose to say it, publicly, on the record. Now, executives at this level do not make public statements like this casually. There is internal deliberation. There are legal teams. There are communications departments. The fact that this statement was approved and released tells you everything about what SBI is seeing right now. But wait, because here is where the iceberg goes deep. This was not just a comment about price. He said something else, something that most people heard and completely misunderstood. He said the petrodollar is dying. Now, before you think this is just doom and gloom dollar collapse content, stop. Because what he is actually describing is something far more nuanced, and understanding it is the difference between reacting emotionally and positioning intelligently. Here is the history you need to know. Since the 1970s, oil has been priced in US dollars. That single arrangement created structural global demand for the dollar for 50 years. Countries had to hold dollar reserves. They had to buy dollars to buy oil. That is why the US could run massive deficits. That is why US debt stayed relatively cheap. The entire American financial advantage for half a century was built on this one arrangement, and now it is restructuring. The US-Iran conflict, the chaos in the Strait of Hormuz, trade routes shifting, technology accelerating. The world is not waiting for permission to move on. But here's the part they are not telling you on mainstream media. The death of the petrodollar does not automatically mean the death of the dollar. What it means is that the mechanism of dollar dominance is shifting from oil settlement to digital liquidity infrastructure. Think about it this way. The old system was simple. Oil demand creates dollar demand. But the emerging system, digital settlement demand creates stablecoin demand. Stablecoin demand creates treasury demand. Treasury demand creates continued dollar demand. If regulated stablecoins are required to hold U.S. Treasuries one-to-one, then every single expansion of digital dollar liquidity creates a new source of demand for American debt, globally. The petrodollar era may be fading, but a digital dollar era could rise to replace it. And the country that builds the infrastructure rails for that new era controls the next 50 years of global finance. Which brings us back to Japan, and this is where your jaw should drop. Japan has officially announced it will designate XRP as a financial asset by 2027. That is a national-level regulatory decision from the third largest economy on planet Earth. But it goes further. Japan is not just recognizing the token. They are absorbing the XRP Ledger directly into the architecture of their national financial system. Not the token, the entire rail. The infrastructure of the network itself is being woven into how Japan moves money at a sovereign level. And SBI is preparing to launch an XRP-paying bond, one of the first sovereign-linked debt instruments in the world to pay interest in XRP. They are pushing XRP ETFs onto the Tokyo Stock Exchange to bring trillions of dollars of Japanese institutional capital directly onto the network. Every single one of those moves is a structural commitment. This is not marketing. This is not hype. This is a nation executing on a decision that has already been made. And here is what you must understand about Japan specifically. Their regulatory framework matured before the United States. They have consistently been the leading indicator of institutional crypto adoption in the developed world. When Japan makes a structural move, the rest of Asia typically follows within 12 to 24 months. Meanwhile, what is happening in the United States right now? We are still debating the Clarity Act in Congress. We are still arguing about whether stablecoins will hurt community banks. We are still fighting about yield percentages and regulatory jurisdiction, while Japan is absorbing the XRP Ledger into their entire national financial system. The CEO of SBI said it directly. The United States has one last chance to lead the digital future, and that chance is the Clarity Act. Get it done, or watch other jurisdictions lead the next phase of financial innovation while America plays catch-up. Now, I know what you are thinking. If all of this is happening, if Japan is moving this aggressively, if SBI is saying XRP will be expensive, then why is the price not reflecting this yet? This is the question that separates the people who will win this wealth transfer from the people who will panic and leave before the move happens. Here is the reality. You can build enormous infrastructure while price remains temporarily disconnected. We are seeing regulation delays, slow adoption in real time. Liquidity is fragmented across jurisdictions. Institutions move deliberately and slowly, and markets consistently front-run narratives incorrectly and then correct themselves. But most importantly, utility takes years to fully materialize into valuation. This is not a weakness. This is a setup. The CEO of SBI is not saying XRP will be expensive because of hype or because of speculation. His broader thesis is this: if XRP becomes a core liquidity asset inside a global financial infrastructure transition, then every price prediction on the market today may eventually look extremely small relative to future utility demand. That is a different framework entirely. Retail investors look at XRP and think, will people buy it and push the price up? Institutional infrastructure investors look at XRP and think, what happens when this asset becomes deeply embedded into liquidity systems, settlement rails, tokenized markets, treasury movement, and cross-border value transfer? Those are two completely different frameworks. And right now, most people are using the wrong one. Think about it like gold and silver. Some people were trading silver like a meme coin, watching daily price moves, reacting to headlines, chasing momentum. Meanwhile, central banks were quietly positioning into it because they understood where it was going to be repriced when the broader monetary system shifted. Same asset, two completely different mindsets, two completely different outcomes. The real bet that sophisticated XRP holders are making is not simply on a cryptocurrency going up. It is on whether XRP becomes embedded into the plumbing of the next financial system. That is a thesis about infrastructure, and infrastructure reprices violently when adoption finally catches up. Now here is the part I promised I would deliver. The thing that is going to determine who keeps their wealth after this move happens. Because here is the brutal truth. Some people are going to get this right and still lose. Not because the price did not move, but because they never planned for what comes after the price moves. Sophisticated investors are not just thinking about the moment of appreciation. They are thinking about structure, collateralization, cash flow, trusts, tax efficiency, timing. The moment you sell appreciating assets, you potentially trigger taxable events that can fundamentally change your entire outcome. The people who win this wealth transfer are not just the ones who buy the right asset. They are the ones who understand the difference between currency for liquidity and assets for preservation and growth. Real estate, commodities, precious metals, digital infrastructure. These are the things that outperform monetary expansion over time, especially in a highly indebted system that has no realistic path to paying back its debt, only to inflate it away. And inflate away is exactly what is coming. Interest rates are heading lower over the next several years. Borrowing becomes cheaper, assets go higher, the balance sheet expands, and somebody has to absorb the cost of that expansion. It is never the people making the decisions. It is always the people who do not understand what is happening. But you understand, because you are still here. The repricing of XRP is not going to come from one single catalyst in one single jurisdiction. It is going to come from multiple structural forces converging simultaneously. The Clarity Act moving forward. Japan designating XRP as a financial asset. The XRP Ledger absorbed into national financial architecture. European banking institutions like Standard Chartered, Deutsche Bank, and Societe Generale aligning their institutional flow into XRP infrastructure. And the petrodollar system transitioning into a digital liquidity framework. Every single one of those forces feeds into the same outcome. The question is not whether this is happening. SBI has already told you it is happening. The question is whether you are positioned when it does. This is the biggest wealth transfer of our generation. The blueprint has not changed. History always shows who ends up on top when a new infrastructure cycle replaces the old one. The people who recognized the shift early and held their conviction through the silence are the ones who wake up on the other side of this completely transformed. The smart money in Asia is not waiting for a headline to confirm what they can already see in the data. They are building. They are signing partnerships. They are absorbing the rails of the next financial system into their national architecture. The only question left is whether you are going to be on that rocket or watching it launch from the ground. Stay wise, stay positioned, and I will see you in the next one.